Hey everybody, this is John. Welcome to the free video. A lot of volatility going on in the markets. Let's take a look at some of the stuff setting up. One of the things that's happened is a lot of the high flyers that have been slammed recently, they have been clearing these walls of resistance and breaking through. And you'll notice here on a weekly chart on now, you've got kind of this rounded momentum, rounded bottom, and the potential here that this thing could start really taking off to the upside. There's a couple of stocks like that. You can see that Roku is actually doing that in a big way. Had a really fantastic day today and continues to, I think, grind higher after hours. And then for stocks like TTD, TTD to me isn't as attractive because now at least has a squeeze. So the question here is, what's kind of going on here? And what you'll notice also is that the indexes, which have been very, very volatile, and I'll talk more about this in the premium video about why they've been trading in this violent range, are building up a squeeze to potentially trigger to the upside here. And you'll notice that the Qs are also doing the same thing. And by the way, there's something actually super important happening on the monthly chart about this as well. And then if you look at big stocks like Microsoft with the Squeeze Pro, you'll notice here that not only do we have a squeeze, but we've also got a Squeeze Pro, and then we got that little hyper squeeze setting up there, which is also setting up for key stock like Microsoft for a big run. So we've got stocks like Apple and Microsoft that are doing great, and then stocks like Amazon that have had a tougher time. Amazon for me is a little trickier, a little tougher to get excited about on the long side. Simply because there's a wall of resistance here. But we're going to come back to Amazon here and talk about this kind of timing when you don't really have a squeeze. And then on the other hand, of course, stocks like Apple here are going up without any weekly squeezes or anything like that, although there's a nice daily squeeze right there. So let's kind of come back here and talk about Amazon. So we'll talk about Amazon here in a second, but one of the things I kind of want to bring up, and this is something where if you've been with us for 3 or 4 years, you understand what I mean by timing. But if you're newer to this concept, this is so critical for this kind of a market. So as an example, here's the S&P 500 on September 20th, 2018. All right, the market is steadily trending higher. The key moving averages, they're all stacked positive. There's no squeeze, but at this point, there's no reason, it's just, hey, just keep buying the dip. This thing is trending higher, right? Well, if we look at what actually happened, all right, and you can see that here we are. So that was that moment in time where it looked like everything was going to keep going higher. And in fact, that was the dead highs. And then from there, the markets actually went into a pretty vicious slide, okay? And from looking at the chart, there was absolutely no warning. All right, but the reality of it is there actually was a huge warning, and it's just understanding what that is. And that is where a concept called timing comes into play. All right, this is something that I learned from Carolyn Boroden. So if you look at this, there's these numbers along here, okay, and 7 is basically means there's absolutely zero timing. 23 and 34 means no, it's not important here. But when you get up here, think of this as you've got a 83 to 90% chance, okay, that the market is going to reverse right there based on what's called timing. All right, literally measurements of time that pinpoint with crazy accuracy where these out of the blue turns can happen. All right. So I was talking about Amazon, and so let's look at Amazon. So here on December 3rd, Amazon has this huge breakout. And so the idea here is, great, let's just buy the next pullback because obviously this thing is going higher. All right, so what actually happened? In reality, Amazon peaked right there and then really puked, and there was really no sign of anything there that was happening. Okay, so the question is what happened? Well, and again, we're going back to timing. So if we look at this, and again, we look at Carolyn's work, trend completion time projection, we could see clear as day, well in advance, that the rally was scheduled to end between December 2nd and December 3rd. All right, this isn't after the fact. This isn't hindsight. This is telling you, it's mapping it out in advance. Okay, and you can see here these high numbers are basically saying, guess what? At this point in time, we expect that move to terminate to the upside and start rolling back down. All right, so if you aren't familiar with any of this, Carolyn and I are going to do a free webinar about this on Thursday, October 7th at 7 o'clock. And what we'll be doing here is showing updated examples of what's happening right now and where to expect the big market turns, not only in the indexes, but also in key stocks. All right. If you go to simplertrading.com/pull, you can sign up there, and then we'll email you the information. But we're going to be talking about in addition to timing, how to hitch an easy ride on institutional order flow. All right, a quick and dirty way to find these precise entry and exit levels, how to avoid getting run over by the market, and a couple of other things. And I just, this is just something where if this is new to you, it's really going to open up and kind of, it's like being able to essentially peek behind the curtain as to what's really going on in terms of that kind of stuff. Okay, because it's just, it's more than just squiggly lines and moving averages. It's larger forces at work, and this is your opportunity to actually understand that. All right, so I'm super excited to share this with you guys, and it's going to be a lot of fun. We'll see you then.